I'm Charlotte McLeod with investingnews.com, and here today with me is Thom Calandra of the Calandra Report. Thank you so much for being here. Great to have you once again.
Hey, always good to be with you, Charlotte. I enjoy these so much.
Really good to be speaking with you as well. I think I was hoping to cross paths with you in New Orleans, but our schedules didn't match up. So we're going to do a conversation here and talk about what's going on. And I think it's a good time to have you on. We were talking before we turned the camera on about topics of interest right now. And you mentioned what's going on with gold versus Bitcoin. So I think that's probably top of mind for people. What is happening there? What are the drivers you're seeing? How is this going to pan out?
Well, in New Orleans, when we did the precious metals panel, which I moderate most years, and we had 5 people. There were, it was a very, very big crowd, probably the largest crowd I've seen at the New Orleans investment conference, which is, of course, focused on metals since like 2003. So people were shouting out, maybe grumbling about Bitcoin because, come on, gold investors especially see Bitcoin as a competitor to gold, right? It's a risk-on investment. And as probably very few of us need to be reminded of, it's at $101,000 or was. Anyway, a lot of volatility. And I think thanks to some very smart folks on the panel, Avi Gilbert and Dana Samuelson and Rich Chekin, Jeff Deist, and Omar Ayales. They're all great charters, and also they follow gold. Well, I think we can safely say that Bitcoin, it's for people, probably investors under the age of 45. Gold and other precious metals, everyone else. But Bitcoin, besides the Donald Trump effect that we've seen in the past 3 or 4 weeks, has some, pluses. As you know, portability. You don't have to worry about carrying, let's say, a Bitcoin, $100,000 over a border. I mean, there are other cybersecurity concerns, I'm sure. Charlotte, I think, and there are other misconceptions and truths about gold versus Bitcoin. However, as almost everyone on our panel, if not everyone on our panel, and I feel, it's great to be able to hold gold. Now, I think gold has portability. And I think the price will fix the portability problem, because let's just say gold goes to $3,000 at the end of the year, which is what I see. That's pretty dramatic prediction because it's only at 2,700, but and it's had a good run. But let's just say gold stays at 3,000, and you want to bring $30,000 or $40,000 across a border. You can take 10 gold 1-ounce coins or $30,000 worth of gold across a border. It's not going to weigh you down that much. 10 ounces. Now, let's say, as some people believe, including me, that one day we're going to see gold at $5,000 or $7,000. So you see what I mean? Price could take care of or solve the portability problem. There you go. Bitcoin versus gold. I'm not going to say anything bad about Bitcoin because it has the blockchain behind it, and most Fortune 1000 companies have blockchain technology for products and services. It's an asset. It's a valid asset. Gosh knows what's going to happen with Bitcoin, whether it becomes a federal reserve currency or a reserve currency for large nations, including, Canada, the United States, the UK, and so on.
Yeah, we seem to be in really such a Bitcoin moment. You mentioned that momentum due to Trump's election, and I think it was really coming through at the New Orleans conference where definitely it seemed to be more of a topic of discussion this year, where in the past it's really been so gold focused. And like you mentioned, I think there was that attitude of people being maybe a little bit upset that Bitcoin is running and gold is behind. But also, I think some people who are looking at Bitcoin and thinking, okay, well, maybe I should get into that. So pretty interesting to see the shifts. And it did come up on the precious metals panel that you moderated. One other thing from that discussion, I think, was a discussion around ways to own gold, safe ways to own gold, and how do you actually do it? So thought we could also go into that a little bit and hear your thoughts on that.
Well, yes. And of course, absolutely the safest way, buy the coins, buy the bars. There is someone in the, a couple people in the front row and in the second row at this, at the New Orleans Investment Conference who were shouting out, Costco, Costco. And in fact, as we know, Costco, at least in the United States, puts these little 1 ounce and 2 ounce, I think they're 2 ounce, but definitely 1 ounce gold, pure 99.9% gold. I don't know what you want to call them, but they're not coins. They're little mini bars, and that shows you how much gold could be entering the mainstream. We have these myths and misconceptions about gold, silver, platinum, Bitcoin, and those misconceptions, sometimes travel into reality and become the truth. But the fact is, when it comes to safe gold ownership, I think, yes, you can buy gold in repositories. I and a number of other newsletter folks, professionals like to buy gold electronically if it's a repository. As you know, Sprott bought the old Central Fund in Ottawa, which I've been following forever, and now you have the Sprott Gold Trust. You have the Sprott Gold and Silver Trust, which I like because it has 40% silver, 60% gold. These are $5 billion repositories now. It's actual gold. They stand by the gold. It's a closed-end fund, which means CEF and CEF.A in Canada will trade at mostly a discount to the actual price. Once in a great while, that discount can become a premium to net asset value. It happens rarely, but if that were to happen, gold would probably be on its way to the $4,000 or $5,000. So I like the actual physical trusts, not GLD. GLD is not it's an ETF for sure, but there are many folks these days who question what happens to the gold that GLD represents. Where is it? Is it borrowed? Is it lent out? Lending gold, anyone can lend gold if you have enough of it and you get a little interest rate on it. But what if you're the person who lends out the gold and you happen to have the bad luck of being in some sort of awful geopolitical crisis and you actually need that gold allocated to you? It's hard to understand, but most investors are not happy about hearing, well, we just move it to a different part of the vault under the China sign, or under the South Africa sign, or under the Poland sign. So I think some of the physical trusts. I also own the Aberdeen Platinum Trust. It trades on the New York, just as CEF does, and I think you can buy a lot of metals these days in trusts. There's even a copper trust that represents pure copper, not the companies. but the metal. But I tend to think that if you really feel strongly about wanting more gold, you should go out and buy a few coins, and you can do that. There are plenty of reputable websites that do it, that send it to you via FedEx, or I'm sure Amazon will have its day soon if it doesn't already in selling gold.
Yeah, you mentioned somebody in the audience at the conference yelling out Costco, Costco when it comes to gold bars. And of course, we know one of the other things that Costco started selling is physical platinum. And I know that you have been telling us about platinum for quite some time, but it seems like our audience is starting to become interested as well. So I'm wondering if we could take a look at platinum moving forward. I know the price has been pretty range bound for a number of years at this point. So are we getting to the time where that changes?
Well, as you know, platinum, like silver, like palladium, has an industrial use. It's a beautiful white metal, and platinum finds its way into gold, into gold-related jewelry and other beautiful things. But in the end, it's a catalytic. It has a catalytic function in vehicles, and especially in hybrids. So when you see the platinum versus palladium tug of war, and remember, palladium went as high as $3,000, while I think it was 4 years ago, and then started coming down, whereas platinum went down as low as 800 or 840, something like that. Now you see them merging. Okay, you have mostly palladium is probably $1,000 an ounce. Platinum is about $950, $960 an ounce. And Charlotte, I think the interesting thing, as you know, is platinum is probably 10 times as rare as gold in the ground. Platinum used to trade at a nice thick premium to gold. Now gold is worth more, probably because of geopolitical aspects, and as we're seeing today, central bank buying by China, which appears to have resumed, and is zooming the gold price. I like platinum. The only way I own palladium, and palladium is more for electric. When you think about palladium as a catalytic, you're mostly talking about electric vehicles. I think, of course, both get use, including in motorized, in carbonized vehicles. But with platinum, you're making a bet on mostly hybrids, and probably even diesel related engines. I think that platinum, this year, you said, we're at the end of the year. Oh my gosh, Charlotte, where did that go? Where's that calendar? There it is. Probably in the next 6 months, we'll see platinum trade above the price of palladium. If you look at the two charts, you'll see it looks almost inevitable. And I'm not a chartist, but I think chartists believe that platinum will overtake palladium in the nominal price anyway. And then from a fundamental point of view, as the CEO of Platinum Group Metals was pointing out to me, Frank Hallam from South Africa, you have under exploration by platinum. I mean, the next big platinum mine that's going to come online will be at the Plot Reef by Ivanhoe Mines, whose shares I own, by the way. I don't own Platinum Group Metals. It's much smaller, but I have owned that one in the past. But you have a situation where if platinum, were to go up a few $100s and stay there, you'd probably see more platinum development online. But it takes an awful long time to develop any mine, and with a platinum mine, especially because you have all these Platinum Group Metals involved, right? There are the classic metals that are attached, like gold, like nickel, rhodium, and so on. And then there are other valuable metals, but it becomes it, it, it becomes an effort that requires serious equipment. And also, as we know, because of labor unrest in South Africa and let's just say war politics in Russia, where a lot of platinum comes from, and palladium, the supply side and the future supply side are it's a very clouded view. But I think it's going to have its day in the sun. Just this copper seems to be rebounding.
Okay, so watching gold, watching platinum, watching copper. I promise that today I won't keep you overly long, but before I let you go, just because we are finishing up 2024, we're heading toward the new year. Other sectors that you see potential, anything that you would want investors to keep an eye on as we head toward another new year?
Well, I'll tell you what I would be a little wary of. First of all, is we've seen a lot of interest in drone companies. Okay, drone companies. Even one of Donald Trump's sons is involved in a drone company. Right, these drones are said to become taxi cabs of the sky. We've heard this. There were a couple of Canadian companies into this a few years ago. Now these stocks have raced. We're seeing so much speculation based on cabinet appointments in the U.S. and waves in the Middle East. Today, even gold is benefiting from the situation in Syria, which apparently we have Assad finally out of power after many years of war. I would say that the only other sector I'm interested in personally is shipping. And when it comes to shipping, once again, it's probably as sensitive to geopolitics as gold. And I like, I invest in the small shippers, the ones that return 80 or 90% of their profits to investors in the form of a dividend. DHT is one. There are no shortage of legitimate shipping companies from 1 billion market cap to 20, 30, $40 billion market caps. So I like shippers, mostly shippers of natural gas and oil. I'm not sure where the oil price is going short term, but I think we'll see a day in the U.S. anyway. Here in California, by the way, we pay, along with Hawaii, the highest prices for gasoline. Right now, we're at $4.50. And, being in New Orleans and looking at the signs, it's like $3 gas. Here, it's $4 to $5 gas. I think we'll see $10 gas here in California and other expensive places, $10 US. And of course, that means you'll see that price in Canada too. And one final thing, Charlotte, I would keep an eye on is, in November we had these gold outflows, and from the ETFs like the GDX, the VanEck GDX, major companies, and the VanEck GDXJ, junior companies. And these outflows are because investors say, "Hey, I'd rather be someplace else with my money." And I'm sure there are tremendous opportunities still in semiconductors, in in clean air companies. I believe in hydro energy. We have a daughter who works in marine energy, pulling energy out of the water, but it's early stage. Still, I would say the activity that we're seeing today is mostly for example, today being a great, fantastic day for gold, right? Back near 2,700 because it's China and central bank buying. And so we'll see these macro flows into gold. This nation's central bank says we're resuming gold buying, or that nation's central bank. And who knows, maybe one day we'll actually find out how much gold the United States owns. In the meantime, I'd look for a little weakness in the dollar over the next 6 months. And generally, a weak dollar is great for gold. So that about wraps it up. I don't know if you want me to list my top 4 positions. I will if you want me to. I often tell our audience at the Calandra Report, but no secret, Ivanhoe Mines, which is copper, and the Platinum Project, copper in the Congo. Alamos Gold, which has 3 producing mines, I think, or 4 now, with a purchase that they just made. And Alamos Gold is just run like clockwork. The company, I've owned it forever. Not forever, but Extra Gold Resources, which is a tiny speculative company in Ghana, in West Africa, and EMX, royalty company, which has been kind of in stasis, but I have a great hope for royalty companies. We'll see.
Okay, I think that's a perfect place to wrap it up. Hopefully we got through all the main points. Thank you so much for coming on to talk about the markets.
Thank you, Charlotte. It's been a pleasure. Happy holidays and all that.
Yes, to you as well. And once again, I'm Charlotte McLeod with investingnews.com, and this is Thom Calandra of the Calandra Report.
Thank you for watching. If you like this video, make sure you hit the like button and subscribe to our channel. We'd also love to hear your thoughts, so leave us a comment below.